Hello, and welcome to today's video where we will be taking a closer look at 3 dividend stocks that Warren Buffett recently dumped from Berkshire Hathaway's portfolio. Buffett is known for holding stocks for the long term, so when he sells out of a position, it's worth paying attention. The first stock we'll discuss is McKesson, a healthcare services company. Berkshire initiated a position in McKesson in early 2022 and built it up to around $3.2 million shares by the second quarter of last year. However, Buffett then began trimming the stake in the later half of 2022 before selling out completely in quarter 2 of 2023. While Buffett didn't hold the stock for very long, he still managed to make a nice profit. McKesson's share price climbed over 70% from the beginning of 2022 through the end of the second quarter this year. So despite the short holding period, Buffett's typical patience paid off well with this trade. One reason he may have sold is that McKesson is more tied to the healthcare industry than the type of wide-moat consumer brands Buffett typically prefers. But the company has a steady revenue stream from pharmaceutical distribution that should provide some stability even in challenging economic environments. With a modest dividend yield of 0.59%, income was not likely the primary attraction here. The next departed dividend payer from the portfolio is Marsh McLennan, a professional services firm focusing on areas like insurance, brokerage, and risk management consulting. Berkshire initiated a position in late 2020 and built it up over the next 2 quarters. But Buffett began cutting it down in mid-2021 before finally closing it out in quarter 2 of 2023. This trade generated solid returns for Berkshire as well, with Marsh McLennan's stock jumping close to 65% from late 2020 through the end of quarter 2 this year. Buffett also collected a bit of income from the stock's 1.5% dividend yield. With its wide range of essential business services and adjusted quarter 2 earnings up 16% year over year, Marsh McLennan appears to have a solid underlying business. But the stock does look a bit pricey now at around 25 times forward earnings estimates. This seemingly extended valuation likely contributed to Buffett's decision to exit. The third and final dividend was Vitesse Energy, a recently created oil production company. This was an unusual short-term trade for Buffett. He acquired a stake in January 2023 when Vitesse was created from Jefferies Financial Group, another Berkshire holding. But then he sold out just a few months later in quarter 2. Despite the quick flip, Vitesse's stock price increase and hefty 8.4% dividend yield helped Buffett's portfolio to generate a small gain. While volatile oil prices make its future uncertain, income investors may still find Vitesse attractive for its high payout, but it didn't align with Buffett's typical buy and hold strategy. So in summary, while these 3 stocks have their merits, it's understandable why an investor with Buffett's long time horizon would move on from them fairly quickly. The stocks either lacked his preferred business attributes or had valuations that became stretched. But these stocks could still potentially make sense for certain individual investor portfolios. McKesson provides stable healthcare industry exposure. Marsh McLennan offers a diversified professional services business. And Vitesse appeals to high-yield income seekers. As always, please hit the like and subscribe buttons. And let me know in the comments what stocks you think Warren Buffett might buy or sell next. Thanks for watching.